Hi everyone, I'm Nick. Today we're going to go through a very exciting episode of why CCR tends to lose money. This is a very interesting episode because you know why most countries, the core central region, are usually the cream de la cream and people expect it to be more profitable. But in Singapore, interestingly, CCR is the one that has the most unprofitable transactions. And today we're going to deep dive and find out why is this happening. If you're interested in this episode, be sure to watch to the end because I'm going to share with you, since it's losing so much, right? Is there any changes and is there an opportunity in 2025 in the CCR region? So please watch to the end and I'll give you the answer right there. If you are new to this channel, my name is Nicholas. I do a lot of real estate content like this. I share my personal journey in terms of my strategies and I also share with you some strategies that help my clients to save a lot of money and make profitable transactions. So if you're interested in such content, be sure to subscribe to my channel and hit the like button for this video if it has helped you in any ways. So let's find out why CCR is unprofitable over the years. So one huge thing, right, is the affordability problem. So we look back into 2010, which is the last 15 years, how has the gap between CCR, OCR and RCR been? So if we look at 2010, in terms of the gap between RCR, which is rest of central region, and OCR, outside central region, the gap was only about 37%. Whereas the gap between outside central region, OCR, to core central region, CCR, is a whopping 117%, which means if you are someone who is living in OCR, you need to pay double in order to stay in the core central area of Singapore. So usually people, in their lifetime, when they get maybe their first HDB or a smaller condo, over time they may aspire to upgrade. And upgrade can be two things. One thing might be in terms of asset class, size. A third thing would be in terms of location. So sometimes people may want to upgrade from OCR to RCR, and in the past that is possible because the gap was still manageable at about 37%. But the huge issue comes when the RCR people, when they want to upgrade to CCR, they realize that cannot because it's 58%, and this seems to be the number where it will deter people from entering the CCR. Because if possible, actually maybe I think most people would at least fathom the thought of living in CCR because it's so convenient, it's near to the workplace. Of course, maybe you will choose a more glamorous part of CCR, not like Tanjong Pagar area where it's just work Monday to Friday and Saturday, Sunday is a ghost town. Maybe you are looking at like Bukit Timah area, Holland area where there's a lot of lifestyle, Real Valley area, even in Saturdays, Sundays. But even these areas is out of reach for most Singaporeans. So there is this affordability problem where most Singaporeans can upgrade from OCR to RCR, but they're stuck after they reach RCR. Then we also look at this thing called decentralization, which actually the government did very, very well. They spread out the core central region all the way to outside central region as well. So what is decentralization about? So decentralization is a concept where, because in the past, Singapore was a monocentric country where most people, they travel to work, right? They will go from outside central region where they stay, maybe like Punggol, your Pasir Ris, Tampines, Jurong, Woodlands, all the way to CBD to work. And that's monocentric because there's only one CBD last time in Singapore and people always work there. So it's a bit inefficient. Why? Because in the morning, you just take the MRT one way all the way, and in the evening, you just take one way all the way back. Why is it inefficient? Because your public transport, right, only one direction is fully filled and then the other direction is generally not as filled or maybe very empty. So it's not very efficient as a country or as a public transport system to be functioning that way. So Singapore government realized that since we have more population and we need to make this more efficient, they decided to decentralize the core central region and the important working nodes of Singapore to outside central region. That is why you have your second CBD all the way in Jurong. You also have your Northern Gateway, your Woodlands Regional Centre is also huge, all the way to the Woodlands. And then your Eastern, where you have your airport, your transport hub, all the way at Changi Airport. This is to help to decentralize. So people working at all these different areas, they may consider living closer to where they work because anyway they can afford, it's near to the workplace, and it's much more efficient in terms of travelling time. And the latest being Punggol Digital District. So a lot of people are staying in Punggol also. So that helps in terms of public transport. It doesn't create so much taxing in the public transport system. Then if you look at how the government planned in terms of all these different townships, right? Actually, they employ the same formula. For Marina South, you see there is a huge gardens. We have Gardens by the Bay. You got Marina Coastal Park over here. So you have Marina Coastal Park here, Gardens by the Bay. So these are all your parks. And then your MRT stations over here. There's also a green corridor over here that we're looking at, and then residential all over the place. If you look at Bidadari, which is in the rest of central region, similarly, estates over here, yet there's a green corridor linking everything, and then the MRT stations over here as well. So the formula is the same, it's just that location is different. But the key issue over here is that for the core central region, we have an issue because of foreign ownership. And this was very huge, especially before 2013, before the ABSD was introduced. A lot of foreigners like to buy core central region, which actually makes sense. If you think about it, if today you want to buy overseas property, if you look into Australia property or London property, UK properties, where will you invest? You usually would invest in the core central region, the capital city, because these are places that you know. So for example, in terms of UK properties, a lot of people are looking at London, Manchester. If you're looking at Australia, people will be looking at Melbourne or Sydney because these are your core areas where people are familiar. So similarly to foreigners, when they come to Singapore and if they're looking to invest because they like Singapore's stability, then they'll be looking at places familiar to everybody. Marina area, Orchard area, these are your core central area. But prior to ABSD, when foreigners can just buy like Singaporeans and can own multiple properties, they come in and they really take over the core central area. So we realize that there's an issue and there's a formula to this. If, in terms of ownership within a development, if foreigners plus PR is more than 30%, then we realize that this development tend to lose money. And this is the case in a lot of your marina developments, Marina Bay developments, Shenton Way developments, Marina Bay, Marina One. All these, if you see, completed 2008, 2010, 2011, all the percentages are above 30%. And they tend to be unprofitable. I can share with you a story why, even if unprofitable, people choose to exit for the foreigners. So I've heard of this case study where there is this transaction in Reflections at Keppel Bay. Even when the transaction was unprofitable, because the seller was a Malaysian, they bought Reflections at Keppel Bay at a certain price, they sold it much later, and even though the price dropped, because they're Malaysian, right, and because Singapore currency grew stronger over the years, after they convert back the currency to Malaysian ringgit, actually they still make money. And that's why these people, they still choose to exit even when it's unprofitable. So yeah, even with all this currency thing, they can still make money. But more importantly, a lot of the foreigners in the past, because Singapore is just like an area where they diversify their risk, they may not need this to be absolutely profit-making properties. So that's why even if they were to sell, because maybe they have other decisions with the money, even if it's losing money, they don't mind exiting that position. But Singaporeans cannot do that. Because why? When Singaporeans buy property, it's all in one. It's not because they feel shocked. Today they go in, they see, they like, they buy. No. Most Singaporeans, they need to empty out their entire savings in order to purchase that property. So that's why most Singaporeans, if you buy a development where a lot of Singaporeans own a property, usually it's safer. So that's the key difference between outside central region RCR and CCR because of this foreign ownership problem. But thankfully now we have ABSD, so fewer foreigners are entering in the situation. But these figures still stay why? Because these foreigners haven't sold the property. They are still in there, and that's why these developments can still be unprofitable even until now. The next issue is the product problem. So let me share with you a case study of Scott Square. This was TOP in 2011. This is at the heart of Orchard Road, beside Tangs, I believe. So the site plan, this is the site plan. Let's look at it. Honestly, nothing much. You have all these units over here. These are the units. In terms of facilities, not much. You only have the pool that I can see, a small, what's this? Lawn area maybe. And that's about it. Not much facilities. So because it has a small site plan, it does not have many facilities, is not very suitable for families. And also, the unit distribution is not that great. Too many one bedrooms over here, 162. The big units like the 3-bedroom, very few, 86. That means little homestay supply. So what does this mean? If there are so many one bedrooms, right, who buys one bedrooms? Usually investors. Investors tend to buy one bedroom. 3-bedroom tends to be owner occupiers. And if the majority is in the small unit type, then not many own-stay people will be staying here. So then the profile of the people staying there tends to be just tenants. It will not be very friendly towards families for own stay. And that's why, because of this, the livability will not be as great. Needs not met because families tend to prefer bigger site plan, more facilities, more friendly for family. And that's why we have lower natural demand. So we realize that now in current market, if you want a very good growth trajectory for any development, it needs to have a high natural demand. Then the property will have a longer term kind of growth trajectory. If the needs are not met, then there's not much natural demand because Singaporeans don't want to buy, then definitely the growth will not be there in terms of the prices. Then we look at the floor plan of Scott Square. This is a 3-bedroom, 1249 square feet. So first thing is quite oversized. If it's oversized, it will exceed quantum. Why? Because after all, it's go by PSF ma. So if the size is too big, definitely the price will be very, very high. And the layout is not very efficient. So you have a long balcony over here, bay window. Your third bedroom cannot fit a queen bed, only single bed. No enclosed kitchen over here. And then the corridor is very long. Yeah. So because of all these reasons, most Singaporeans going already will realize that I cannot really use. In fact, if you see the newer developments in OCR, RCR, you will realize that most of the bedrooms, or almost all of the bedrooms, tend to be able to fit at least a queen size bed. So what, you have a master that is so big over here, but your third bedroom can only fit a single bed. Actually, that is not preferred. People would rather have a smaller master as long as every bedroom you can fit a queen size bed at least. That is actually much more preferred. So because of all this product problem, we realized that Scott Square has many more unprofitable transactions because low livability equals low natural demand. Then the low demand just means lose money now. So you see the transactions are all red, 700 plus K, 800 plus K. So that's why so many Singaporeans don't dare to enter CCR anymore, because you see all these unprofitable transactions, you are like, I cannot. This is a place where I need to absolutely avoid. And it's true, because of all these issues, because floor plan is really very bad, site plan is also quite bad. Then another product that I want to share with you is the Lumos. This is at Leonie Hill. Very nice area, but once again, look at the site plan, nothing much. You only got a swimming pool, you have a kids playground, you have a BBQ pit, a small gym, and water feature, and that is about it. Then you look at the unit distribution, right? 1 bedroom, 4 units, 2 bedroom, 3 units, 3 bedroom, 22 units, 4 bedroom, 10 units. Wow, the whole development, really, I think less than 100 units, right? Like that, 20, 40, 50 plus units. That's about it. So because it's single tower, poor unit distribution, too few units, there's no price sustainability. So what is this about? If you buy today, 3 years later you want to sell, likely you might be the latest transaction, your own purchase may be the latest transaction. And why is this important? Because if you yourself is the latest transaction, how can you further push your price upwards when you want to sell 3 years later? That's why it's very difficult. And that's why bigger developments like 300 plus units and above, when you have steady rate of transactions, everybody wants to sell high, but it takes time, it takes more transactions to do that. So hopefully when you sell that time, your neighbors have already pushed out the prices, so it's easier for you to call for a higher price, whether is it to match your neighbor's price or ask for a slight margin from the last transacted. Usually buyers are more willing to do that. But if there's so few units, and when you want to sell, you may be your last transaction, how are you going to get your premium? How are you going to get your profits? Very difficult. So because of that, same thing, low livability, low natural demand, that's why lose money. Then let's look at the floor plan itself. a 2-bedroom. This 2-bedroom is in fact 2 levels, Yeah, one side you look at it, right? You just, what is happening over here? So first thing you can see, the odd shape over here, these curves. Why curves are not great is because it's very hard for you to place your furniture. There's a spiral staircase that you're paying for it. There's a void area that you are paying for it that you can't really use. So maybe just very high ceiling height. So yeah, this is also void. Master odd shape, void you cannot use. Kitchen is not enclosable over here. Yeah, and then also long walkway lah. To be fair, the living dining landscape is good, but the thing is, it's odd shape. So it's very, very difficult to do things. Then 1173 square feet, 2-bedroom. Yeah, I think this one is probably wrong. Sorry, I probably copy paste the previous slide. So there's no 3rd bedroom. So let me cancel this out. So you look at this, master bedroom, bedroom 2, and that's about it. You have a walk-in closet, but you need to ask yourself, the bathroom is also very odd shape. So it's difficult for you to place stuff. You won't feel the size of a 2-bedroom, even though it's 1173 square feet and you pay for it. So that's why very hard for people to come in to purchase this, to be very honest. Then the Lumos 3-bedroom, jialat also. Because why? Look at this, the planter surrounding the whole unit is hugging your whole unit. You have a home shelter. But thankfully this one can fit double bed for everything. But the key thing would be the planter is surrounding your whole unit. And 1755 square feet for a 3-bedroom is absolutely too massive. Usually maybe 4-bedroom will be looking at this size. 3-bedroom, a bit difficult. So really wasted planter and balcony. And then your walkway also once again, very, very long. So yeah, that's why it's very difficult. The next case study I want to share with you is the peak at Cairnhill 2, TOP 2015. So these are all similar era of condo. This is in Cairnhill, so same also in Orchard area. Small site plan. This is really just a site plan. You see, really not much facilities, just a pool over here. Then sun deck, car park, BBQ pavilion, generator, bin center. So nothing much honestly. It's just an apartment. Lack of facilities, same thing. Because lack of facilities, families do not want to come in. Poor unit distribution because only have 2 bedrooms. 60 units. Once again, very small development, so you may be your last transacted. Yeah, and then this is the layout of how the peak at Cairnhill 2 looks like. Oversized exit quantum, 904 square feet. It's a bit big lah. Usually this is about 3-bedroom size, especially in CCR. You have excessive planter. Look at the planter, look at the balcony. Planter, bay window, planter, bay window, planter, balcony again. Then your master bath also must have bay, also must have plant. And then your bedroom one can only put a single bed. So all these are issue, but I really like the landscape living dining But 904 square feet, that's a bit much. So because the layout is not ideal, once again, low demand equals lose money. And that's why peak at Cairnhill 2, unprofitable. Look at that. But now, the important question is it only CCR that has these issues? Is it only CCR that lose money? What about OCR and RCR? So this is another case study that I want to share with you. Sky Habitat in Bishan, they also have odd shape. They also have oversized 1248 square feet for 3-bedroom, dual balcony, okay? Small master bedroom, long corridors. 2 balconies, absolutely really waste of space. Long corridors over here also. Other than that, it's pretty good in terms of layout. But the bedroom 2, this window is very, very small. So because of that, you can see that Sky Habitat also has a lot of unprofitable transactions. So actually not just CCR that faces issue. It's not a CCR thing, it's just so happen that CCR has a lot of case studies where the layout, the site plan was very bad. That's why they lose money. When OCR, RCR also has such bad floor plans, they actually also suffer. This is as shown in Sky Habitat. Then the next question is, how do we solve this CCR issue and whether is it being solved right now? So the 2 key issue is demand problem, which is what we mentioned about affordability, price gap, and then product problem about site plan and floor plan. Then we realized that decentralization maybe is the key to save the core central region. Why is the case? Because as government decentralize, they develop your Woodlands, you develop your Changi Airport, Lentor is a new township, Jurong as a second CBD. They also sell land, and then there's also new developments around the area in terms of housing. So Woodlands, you have your Norwood Grand, which has already transacted 1895 to 2252 PSF. Lentor area already transacted up to 2005 PSF. Parktown recent new launch in Tampines already 26 PSF. Lorong Chuan done 2785 PSF. Mayor area, East Coast area up to 3005 PSF. Clementi done 2008 PSF. Toa Payoh done 3K PSF. Jada in Jurong East done 2008 PSF. So if the prices have climbed up so much, then core central region now seems very cheap. Because so far, there's not much new launch in the core central area. If there's any potential new launch, maybe there is a chance that the prices will be very attractive, relatively speaking. So since there is this decentralization, right, most people can accept paying top dollar at all these launches that we just mentioned. Then when they bought and they sell at a margin, can I say that it's easier for these people to then move towards the core central area because the price gap seems to be narrowing? And this is the case that we are seeing. The affordability between core central and the rest of the RCR and OCR, the gap actually right now is at all-time low. So in Q1 2025, the gap between your core central and RCR in this report is just 4.5%. The gap between CCR and OCR is only at 21.2. Remember just now we mentioned that 15 years ago, OCR and CCR was more than 100%. Now the gap has already reduced to 21%. So for anybody who is looking to upgrade to core central area, now seems like the best chance. So this was a chart that I used just now. They mentioned RCR to CCR 1.75%, even smaller than what I have here because that one is first quarter, this is 2025 in general. The gap between RCR and CCR is only 1.75%. What does this mean? It means that for people to upgrade from RCR to CCR, and logically speaking, actually a lot of people may have the dream of moving to CCR, of upgrading to CCR. Can they afford now? Actually they can. Because why? We see that even with a 20+% gap from OCR to RCR, RCR still continue to climb. Means the gap is still very healthy. But now RCR to CCR is only 1.75%, almost negligible. Can these RCR people move to CCR? Actually, they really, really can. Then the next thing I mentioned about foreign demand. Foreign demand is also at all-time low. Q1 2025, new sale only 1% of ownership is foreigners. Resale only 1.3%. See, last time got 21%, 17%. Now it has dropped all-time low. Low foreign demand, or rather low foreign ownership in these properties is absolutely a good thing because why? As I mentioned, most Singaporeans don't want to lose money. So if you are buying a development where there are fewer foreign ownership, definitely it will help you. Also because why? In times of crisis, when people want to liquidate assets, foreigners will be the first one to go because they need to liquidate their asset, bring back to home country for whatever reason to tide through. But Singaporeans, this is our home country, why would we need to liquidate? It's unlikely we will liquidate unless, of course, it's an investment property. But as we know, in today's times, most Singaporeans buy for own stay, no longer for investment, rather no longer for rental property. So people buy because of a need. So since most Singaporeans are owning these properties, the tendency of them liquidating during distress is lower compared to those developments with more foreigners. So in terms of crisis, those developments with more Singaporeans ownership tend to be more resilient than these developments with more foreigners. So this is a key thing to take note. And the product changes over time is also very interesting. So I've panned out, these are the core central region developments. First one, we have Martin Place over here, number 1. 1421 square feet, much bigger. TOP 2011, so this is the oldest one in this example. They had a lot of long balconies, not very usable. You cannot really place a huge table outside. You have planter, bay window really jialat. Master, very, very big. Yeah, so this is 1421 square feet. Then in 2021 TOP, we have Martin Modern, which is 1335 square feet, already a bit smaller, but the sense of space is still very good because you see a living room, very squarish. You still can fit a very good size living dining and only one big balcony over here, no bay window, no planter. Master can still fit a very good size king size bed, and no wastage of space in that sense. Yet they can bring the size smaller. Then we have Irwell Hill, TOP just last year, 1270 square feet, even smaller, but they are able to pack a lot of things as well. You see the living dining is still very wide, and that's the important thing. All your bedrooms can still fit your queen size bed. Master still very big, still got walk-in wardrobe over here, and these are the key formulas that buyers are looking at. But size has been going down. Then lastly, we have One Marina Gardens, just launched this year, 1173 square feet. Once again, living dining still very big. All the bedrooms still can fit queen size bed, yet they're able to sell you at a smaller square footage, which means it's much more efficient. Affordability also comes down. That's why, because of all these, suddenly CCR becomes much cheaper. So actually, the key game changer over here is in the core central region new launches. Why is that the case? Because URA policies are now helping consumers a lot. So last time there was a period of time, as I mentioned, there's a lot of bay window, a lot of planters, big balconies, odd shape. But URA also wants to benefit consumers like you and I. They give a lot of regulations to developers so that developers don't see the need to build bay windows, planters, and very wasted space. And that's why you have all these things like harmonization that come into place where developers can no longer charge us college. So because of all these policies, developers now are in a much more stressful position to think about ways to maximize the square footage so that you and I can also afford all these new launches. So why new launch is important? Because firstly, you have more efficient layouts, you pay more bang for the buck, and also, more value for money. And I think important thing to know is because now the people who are buying any property in Singapore tends to be Singaporeans. So buying new will almost guarantee you that the foreign ownership is much more lower than the resale properties in CCR, because the resale properties have a lot more higher percentage of foreign ownership in the older properties. But people buying today, foreigners, ABSD is 60%. Honestly, I don't think there will be as many foreigners who are looking to buy new properties today in the CCR. So that's why as a Singaporean, if you want to buy core central region, I think it's much more safer now because more bang for the buck, and fewer foreigners buying into these areas. Then we also have the River Valley Township. This is very exciting because in the second half of 2025, you have about 5 launches around the River Valley area. So this township is interesting because it creates space for your Tiong Bahru, Queenstown, Redhill upgraders. You have your Dawson area, your Redhill, Tiong Bahru. All these are past $1 million HDB, more than $1 million HDB, even for a 4-room. Then they have no place to go there. If they want to upgrade, right now they only have the existing resale properties, which may not be the most ideal. If they are looking for something newer, there is no supply in the area. And usually, people who are already used to certain place, especially so convenient, right? You are very close to the city, you usually want to stay within the same area. And likely they're able to afford. Why? Because when they bought these properties, yes, it was expensive, but now the prices have climbed up even more. They're probably sitting in very good profits. But there's no good product for them to enter. But with this River Valley Township, finally, there is a product, or rather there are products for these people to move to. And the good thing is, when these upgraders move on to River Valley, more people from the outside central region are able to move to Tiong Bahru, Queenstown, Redhill to upgrade. Because remember, people from maybe your Woodlands, Punggol, Tampines and Jurong, they may also aspire to move closer to the city in terms of city fringe like Tiong Bahru, Queenstown, Redhill, Ghim Moh HDBs also. So this River Valley Township will really be very interesting, and there are 5 new launches in the second half of this year and the first half of 2026. So let me share with you some track record in the newer condos in the area, in the core central area. And we have the Avenir. This is in River Valley. TOP just last year is a freehold project. From the site plan, from the get-go, you can see that, wow, the site plan is actually very big. I've been to this development. It's very nice. Full condo facilities. You have your tennis court, a large pool, a large lawn. Yeah, really full condo facilities. The gym was also very, very nice. The unit distribution was also very good. You can see that there's more emphasis in the 3 and 4 bedrooms. So who are they trying to cater to? Families. They are trying to cater to families and then more for own stay. When a developer creates such a unit distribution and such a good floor plan, who will they attract? Families buying for own stay. And these are the people that will create the natural demand, because with natural demand, then the prices will go up in the long run. And so we can see from the latest transactions, these are all profitable or in the green. And you look at the floor plan, these are also very well executed. Even for the 2-bedroom, 829 square feet. Kitchen comes with windows, very livable. Bathrooms, good size. Master bathroom comes with the window as well. Living dining is also very good size. Only one balcony over here. Both bedrooms can fit at least a queen size. Even for the 3-bedroom 141, this is smaller, relatively speaking to the older CR condos. All 3 bedrooms can fit your queen size bed. Kitchen is enclosed. It comes with a store. So actually this kind of floor plans is very similar to what we see in the OCR and RCR. Then the next example we have is Irwell Hill, TOP also last year. Same thing, large land, full condo facilities. I also went this one, very nice. They have like I think a culinary area for you to cook or something. It's fully air conditioned. It's really very upper class lah. And you look at the unit distribution. Of course, 1-bedroom we have quite a bit. 2-bedroom we have more. 3-bedroom also pretty good. And the sizes, quite good size. Who are they trying to cater to? Once again, families. And you look at the site plan, it's very family friendly. So we look at the transactions, same thing, very profitable. 2-bedroom premium, this is extremely well planned, very efficient. Kitchen, while don't have the window, is kind of enclosable lah. Just that don't have the window. Bathroom also good size, so there's no wastage of space. You see the dining and living is tucked quite close together. This 2-bedroom is also good for own stay or to buy to rent out. The 3-bedroom premium, very nice size, living dining over here. Dry kitchen, wet kitchen over here. All bedrooms can fit queen size bed. At least 1270 square feet is a sweet spot for families also. Then this is one of the last part I've come to this segment where we compare the older and the newer developments within Orchard area. So Devonshire is closer to Somerset. We have 3 Cascadon, which is closer to Orchard. This one is the old and this one is the new. Both 1-bedroom, but look at the floor plan, right? It's very, very different. 506 square feet for the older Devonshire. You see the living dining is much wider than the bay window, also quite jialat. You look at the planter, oh my goodness, and the balcony. And then you still have a home shelter. Why do you need a home shelter for 1-bedroom? Because maybe you're an investor, you're buying to rent out. The home shelter actually don't really add value to you because the tenant may not need it. As compared to Cascadon, very no bullshit lah. It's just come in, kitchenette on one side, dining, living, and then a small balcony and the aircon latch is over here. In fact, this is very good because the aircon latch is vertical, means here should be full height window. The master bedroom should be brighter than the rest. And so honestly, this one, 452 square feet is much better plan than this 506 square feet. So then let's see what's the difference in the profits. So you can see 3 Cascadon is the newer one and Devonshire is the older one. At least the new one was profitable and the old one largely unprofitable simply because of the layout. And both are freehold, just to be clear. So it's quite a fair comparison. 3 Cascadon was launched at 3495 PSF, so much higher, yet still able to sell at 3982. Devonshire was launched 2003, but still lose quite a bit of money simply because the product was very different. So today, is there an opportunity in CCR? So for me, I really think there is, because right now we are in a situation where the affordability gap has already come so close that RCR people can comfortably upgrade to CCR. Number one, foreign demand almost no more already. So we know that it's actually quite safe buying to CCR area since foreigners won't speculate, won't affect our market as much. Lastly, the product itself is very good because the site plan and the floor plans will now be very efficient thanks to URA policies, and also because developers also want to sell well. They also want to make sure that Singaporeans can accept. Now the target audience is Singaporeans. And Singaporeans, can they afford? Yes, because I just mentioned the affordability gap has come to be so close. And to be honest, CCR right now should be somewhere that you should definitely consider, because for the second half of 2025, even for next year, a lot of the new launches will be in the core central region area. And I think if there are so many land plots launching together, if you were a developer, do you think you'll have more fear or not? I definitely think you'll be much more fearful. I definitely think that developers will price more sensitively, and that's where consumers like you and me can stand to benefit. I've come to the end of today's video. I hope this will be an interesting episode for you to rethink how CCR will be like in 2025 and 2026. If you have benefited from this video, please hit the like button. I also want to hear what you have to say in the comment sections down below. I'll read every comment. If you don't believe in whatever I just said, please leave a comment down below. I'll definitely love to have a conversation with you. If not, I will see you in the next one.